That's a wrap.
So I'm about 1,700 milligrams of caffeine right now.
Oh my
so,
God.
Okay,
Talk about Gap.
I'm gonna tell you the top secret of F&I Products.
Oh my God, no way.
Yeah, every single.
I told my audience that I quit.
Back to the smoke break here with Adrian and Adriana.
Welcome, guys.
How you doing, Adriana?
I'm doing great. How are you doing, boss? I
Good.
see, how many, what's that? Rebel number what, 40?
Well, I don't count it by cans. I count them by milligrams of caffeine. So I'm about 1,700 milligrams of caffeine right now.
Oh my God.
Remember, overdose on caffeine is 2,600.
Wow.
So
Wow,
we're
wow.
good.
I was actually, I made a video earlier today and I was actually I told my audience that I quit the Red Bulls and now I'm drinking only like nitro cold brew stuff. I'm really thinking about just going back to Red Bull.
Please do.
Yeah,
Please do.
it's
Let me tell you, it's like anybody.
I didn't do so good.
It's like anybody that tells me that, hey, Adrian, you need to quit smoking. I'm gonna tell you something. I ain't no quitter.
That's
All
right.
I
Mama
ain't
didn't raise no quitter.
Mama didn't raise no quitter.
That's right.
All right. So today's gonna be straight knowledge.
Yes.
You have a lot of questions.
Well, the viewers have a lot of questions.
The viewers
as well.
have a lot of questions. We have a couple scenarios here. So I got the whiteboard ready. I don't know what you're gonna ask me, so hopefully I'm able to explain it to the best of my ability.
Yes.
So what's the first thing we got?
So customers want to know, how is it that when we present a pencil or Foursquare that we get to that payment?
Mm-hmm.
So I can give you an example of like a vehicle like MSRP or with the incentives and all of that disclosed, but can you break down how we get to that payment to the customer?
Sure. So let's just say, for instance, guys.
Is it just math? Like people are asking, is it math?
So we have a lot of criteria. We have credit, which is a big important thing.
Yes.
We have MSRP. MSRP is the manufacturer retail suggested price, manufacturer suggested retail price, okay?
Yeah.
So let's just say the manufacturer retail suggested price is gonna be 50,000.
Okay.
And make sure, cut that, make sure, manufacturer suggested retail price. That's what MSRP is, right? Let's just assume it's $50,000. You have a thing called dealer discount, okay? Dealer discount, okay? That could be in a range of a $50,000 vehicle, anywhere between $3,000 to $4,000. Okay, you have holdback. I bet you don't even know what holdback is, right?
I was just about to ask.
Holdback is a bonus, basically an incentive that they give to dealerships that you don't get paid on, I don't get paid on. It's the dealership's money, right?
Really?
So it's an incentive, it's a hidden money that dealers have, okay? So that in a vehicle that's $50,000 can be about, again, I'm going to round off numbers for better math, $1,500. And then you have the rebates. All right? You got rebates. On a $50,000 MSRP, let's say we were looking at around $1,500. That could be, for qualifying rebates, could be anywhere like a loyalty rebate, a national rebate.
Yeah.
It could be so many rebates, but let's just say you qualify for $7,000.
Question, can the customers get those rebates in cash?
Yes, they can. We're gonna get that. We're gonna get on. So we're gonna get to that. So check this out. So
Alrighty.
let's do the math. So it's gonna be 7, 8, 9, 10, 11, 11, 5. So 50,000 minus 11,5 is what? Do the math.
Do the math. Take out the calculator. Sorry, guys.
So we have dealer discount,
Yes.
which is the dealer's money.
Yeah.
Holdback, which is the dealer's money, which is $1,500. And then the rebates, which the rebates don't belong to me whatsoever. They belong to the consumer. That's $7,000. That's a total of $11,500. 50,000 minus 11? 50,000.
50,000 minus 11.
There you go. All right.
39. I was only off $500, guys.
Really? 50,000 minus...
Minus 11?
Okay. 39. $39,000. Plus, again, this is not the dealer's money. This is the state and any federal taxes. So state is tax, title, and license. All right? Depending on your state, that can range anywhere between 4% to, if you're in California, 9%.
My God.
That doesn't go to the consumer. That's just to live in the great state of Texas is 6.25. So that automatically goes here. So you end up financing around, if we're financing in Texas, around $41,000, $42,000. The balance is then the amount financed. That is your out the door. That's what you would call the out the door. Let's say for just illustration purposes, 6.25% plus tax, title, license, registration. In the state of Texas, the doc fee is $225. Let's just say, all in all, comes out to $41,900. That is your out the door price, or other known as amount financed. Okay, whichever way you want to call it, out the door or amount financed. Okay, now this is where credit goes into place now.
Ooh.
So this is all controlled right here by the manufacturer and by the dealer. This is controlled by the state. And now this is your amount financed.
Yeah.
Now, what is going to determine your payment? So it's all going to be credit. So credit ranges between a 300 credit score and an 800 credit score. Okay? So based on your credit range, they can either say, we can give you a 4.9 rate, or the state max in the state of Texas is 18%.
Wow.
So depending on your credit situation, this is where the real truth lies here. 4.9 to 18%. So depending on your credit, your payment can range $600 up or down, depending on your credit.
Yeah.
A month. It's a lot. Great credit, bad credit. Sometimes it's worth fixing on your credit. Sometimes it's not. And a vehicle is definitely worth it.
Yeah, for sure.
Now, if you have really bad credit, not only that, but the banks, not us, not the dealership, the banks might require you as a high risk loan, and they might say, hey, you know what? We need a down payment. I need 20% down, and I'm going to give you an 18% rate.
No.
Exactly. That's what the banks, you want a loan, that's what the banks are going to do.
Yeah.
It is not beneficial that way. Okay?
Definitely not.
So, guys, credit plays a big part. So whenever I hear customers tell me, Adriana, oh no, you guys are higher. You guys
are marking up the price.
You guys are really, you guys are screwing me because that payment's too high. The payment is all determined on your credit.
Yeah.
So if your credit is good, you're going to get a good payment. As long as the amount financed, you can have a customer that has an 800 credit score and a customer that has a 500 credit score, and their payments are going to vary tremendously night and day. So
on the same vehicle, like this, like we're talking same vehicle. Oh wow,
identical same vehicle. So yeah, so that's how
we come up with the payments.
That's where we come out with the payments, exactly. So, what was your other question?
My other question is, let's say a customer has a 450 credit score.
Okay.
What determines that credit score? And then you can kind of break it down there. How do the banks see, or how do the banks come up with that score?
All right, break it down.
Break it down.
Okay. 450 credit. Does that mean you cannot buy a car?
No, it doesn't mean that, right?
No. Right? Couple things that I need, all right, in order to get you approved of your 450 credit score. Income. Time on job. Down payment.
And who's going to ask? The bank?
The bank is going to ask for all of this, right? So again, these are all positives. You don't have to have all of them, but these are all positives, right? A cosigner. Okay, what's another one you could think of?
Cosigner, down payment, time on job. Money down.
Down payment. The vehicle.
The vehicle. Oh, we asked for driver license, ID, verification information.
DL. Okay, so these are the goods. Now, what are the bads? Past due on current debt. What else?
Too much debt.
Too much debt. Repos.
Ooh, that's a good one.
Past due on.
Their current
This could be past due on autos.
Mortgage.
Mortgage.
Credit cards.
Credit cards. Okay, these are negatives, right? These are all negatives. These are all going to be positives, right? Okay, what else do you think it can affect your credit score?
The the time of your credit, like it's credit.
Age.
Yeah, history, age.
On credit, not your actual age.
Yeah.
All right. What else is a negative? What else can be a negative on your credit? We already talked about past due, too much debt, repos, and age. I think we can.
Or like just too many lines of credit, like too much going out.
We put it there, too much debt.
Yeah.
High credit utilization.
Yes.
High credit utilization. So these are negatives, these are positives.
Yeah.
So when you have a 450 credit score, that does not mean you cannot buy, but we have to offset them. It is a balancing act, right? So when I go to the bank, this is the big bank, all right? And you have too much debt. You have repos.
Yeah.
All right? Let's just say you have 2 out of the things that I've written down on negative. Okay, Adrian, I'm a 450 credit score and I have too much debt and I have repos. Perfect. Now, that's 2. You have 2 negatives. We got to find at least 3 positives. So, do you have income? Well, Adrian, I make a lot of money and I can prove it. Great. That's 1. Adrian, I've been on my job 7 years. That's 2.
Perfect.
Adrian, I have a down payment. That's 3. So those 3 right there are outweighing your negatives. The chances of me getting you approved are going to be a lot higher. But then, if you go out there and says, Adrian, if you need them, I got my brother that's willing to co-sign. That's 4. Adrian, not only that, but I'm open to whatever vehicle you're able to get me finance with. That's 5. And by the way, I also have a driver's license. Oh my God.
Oh my
That's
God.
6.
Yay!
So that almost guarantees me an approval if you have all of those things. So that it's all about outweighing your negatives. You have negatives and your positives. You got to make sure that you outweigh them. I have to have more positives because when the bank tells me, no, I'm not going to give them a loan, I'm going to go out there and say, well, look at this, 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 and look at this. And I win most of the time. But I got to have all of that, right? Or I have to have some of that. I weighing, right? So that's how credit works, pretty much, when it comes to an approval with a bank. All right. So what other questions does the viewers have?
The viewers always want to talk about negative equity.
Oh my God.
They always want to talk about negative equity. Let me give you this example.
Hold on. I got screwed.
Yeah.
Is that how do you spell screwed? Screwed?
Sure.
I got screwed. All right? Anybody that has negative equity, that's the automatic thing that they think, right? Anybody that has negative equity, that's automatically what they think.
Yeah.
It's not that, guys. It's not that at all. All right? If you buy a vehicle that's $50,000, okay?
And it's worth 30.
Remember what we talked about? Plus tax, title, license, and you put 0 money down, you're going to finance $53,000. Okay? 0 down will always guarantee you negative equity. Okay? So the vehicle's worth 50, you didn't put taxes, you're financing taxes, you're already $3,000 in the hole, plus every single vehicle out there depreciates anywhere between 20 to 40% as soon as you drive it off the lot. So as soon as you drive it off the lot, that vehicle is now worth $44,000. But you didn't finance $50,000. You financed $50,000 plus tax, title, license, and registration, and that vehicle's worth $44,000. Right off the bat, you're going to be negative. It's just math, guys. Nobody's screwing you. Nobody's really messing with you. And then here, let's add one for you. You don't put money down. You finance taxes, and then you're trading in a Hyundai Elantra, and you're upside down $10,000. So now, this vehicle that's worth $44,000, you're putting in more negative equity. You're financing $63,000, and then I get customers here all the time that says, Adrian, I went to this dealership and I owe $63,000. I got screwed. No, you did not get screwed.
Oh, that's right.
It's just the math. If you don't put money down and you finance your taxes, if you roll over negative equity, you're going to have to keep that vehicle longer than 6 months, guys. All right? You're going to have to keep it for at least 3 years until we can pay that balance down. So, what I'm going to explain to you is very, very simple. Okay? Well, Adrian, I've had it for 2 years and I'm still negative. Okay? So this is your balance. Okay? All right? This is your balance. This is month 1 and this is month 72. Right? And
Right.
You pay it off. All right? All right, so we have month 1 and month 72. Okay? And then this right here is going to be your value. Okay? Okay? As soon as you start off, your value and your balance. Your balance is always going to be higher than your value.
100, yep.
Month 1, month 2, month 3, month 36, okay? Negative, negative. So then there's a point in where you reach 36 months where your value is going to meet, and it's going to be right there because now your balance is exceeding the value. Your value is not going at the same rate as your balance because your balance will eventually go to 0.
Right.
Your value of your car is not going to go to 0 ever. I don't care how much you have. I just traded in for a 30-year-old Toyota Camry and I still gave the customer $1,000, you know? So you just have to reach to this point where you're not negative. Year 4, you actually have your value is here and your balance is here. Now you have something very rare in the automotive industry, which is called positive equity. This is extremely rare,
It is rare.
very rare, but it's right here. How do you do that? You finance for shorter term, or put big money down. How do you avoid negative equity? You either go shorter term, you put big money down, or you let time do its job.
Yeah.
You wait, time will do its job. Or if you don't want, Adrian, I want to trade it in 2 years. Perfect.
Get a lease.
Finance it for short term or put big money down. Or you're always going to get negative. And remember, just because you're negative doesn't mean you got screwed. It's just the math. That's the way math works.
Yeah.
It's the way math works. All right. What other question you got for me? Because my caffeine is running out.
Oh my God. I think these were the only 3 scenarios, unless you can think of another one.
Let's see.
People want to talk about negative equity, credit, how we got to their payment. Ooh, you want to talk F&I?
F&I Products.
Yeah, F&I Products.
Okay.
Talk about Gap.
I'm going to tell you the top secret of F&I Products. F&I Products is finance and insurance. I don't have that much energy to go over it, but I'm going to give you guys the top secret, okay? But here, I'm going to write it down, all right? The secret that nobody's willing to tell you about finance products, okay? I'm going to cover the camera.
We're going to get canceled.
They always sell me a bunch of products. I get screwed in the finance department. I always, oh my God, the finance department. Oh no, oh no.
They didn't even explain to me what I was buying.
Okay, very simple. All right, let me explain to you the key, the secret.
The secret sauce. This is the McDonald's Big Mac secret sauce.
You ready? The secret to finance.
Oh God.
They sell VSC, they sell tire and wheel, they sell windshield, everything. You ready?
Ready.
They are optional.
Oh my God, no way.
Yeah, every single product in the finance office is optional.
There's no way.
That's simple.
But my F&I manager told me I have to get Gap.
They screwed me with this, they screwed me with that. They put it, guys, they're optional. It is your legal responsibility to review your contracts. And if there's something in your contracts that you do not like, you don't have to buy it. As a matter of fact, if a very shady dealership is forcing you to buy F&I products, guess what? You can walk away. I know it's very
What?
You
There's
can walk
no
away.
way.
You can come to a dealership where they're going to be transparent with you,
Right.
and we'll be able to. So now, they screwed me in F&I. They sold me a bunch of products. Nobody had a gun on me. Well, like here, we got to erase the word gun. We can't say gun. They screwed me in the finance department. Well, no, they did not, because nobody had you held hostage telling you that you either signed or else to buy this car.
Right.
As a consumer, as a finance manager, there is a legal responsibility. As a consumer, you have a legal responsibility to verify your contracts. If there's something in your contract that you don't like, tell them to remove it.
Right.
And if they don't want to remove it because they're shady dealers, this is what you do. You get up and you're like, thank you, I'm not buying. Okay, go ahead.
Alrighty, guys. So this is, welcome to the Sales Myth or Fact segment. This is a segment where I ask Adrian, our general manager here, some questions, and he has to answer one truthfully, and it's just going to be true or false. Are you ready?
Okay.
Managers sit at the desk all day. True or false?
True.
Dealerships mark up rates.
True.
Cash buyers get better deals.
False.
You make $10K on every deal.
I would have hair plugs by now if that were true.
Oh my God. And that was it. Those were quick.
That's simple. I gotta go quick, guys. I gotta go back to sell cars.
Those were quick.
Adriana forces me to do this podcast, and
be quiet. Be quiet.
We gotta hurry up here.
That is
We gotta
crazy.
sell cars, guys. Just so you know, look at how many damn.
Oh my God.
Look how many missed.
Wow.
In just a couple minutes I've been back here, guys. Look at this. I mean, just so you guys think, my life is a mess. So at the end of the day, Adriana.
Yes.
It's all about constant and never-ending improvement. Always
right.
keep learning and always ask questions.
Yes, sir.
You never stop learning. If one day I'm not in this earth anymore, one thing that I'm always going to teach you is always question everything.
Question the why. You've always told me.
Always question everything, from customers to your managers, to your general manager, to anybody. You're like, Adriana, I want you to do this. I don't want you to do it. I want you to say, can you explain to me why? It doesn't matter if there's a good reason.
Yeah.
Explain to me why. Well, this is what you'll understand it a lot better once you get older. Once you get to my age.
Oh God. Quick question. I'm gonna give you two scenarios, and you're gonna tell me which one is worse.
Is this the last scenario that
This
we're
is
gonna do?
this is the last segment, guys, because he
Jesus.
has to go.
Okay.
This is the last segment. So what's worse? A customer with a 520 credit score and has $15,000 of negative equity, or a customer with an 800 credit score who negotiates for 4 hours.
Wait, so what was the question? Which one's better?
Which one's worse?
Which one's worse?
An 800 beacon that's going to sit with you for 4 hours discussing and negotiating, or a customer that has a 520 credit score and is upside down $15,000.
I would take the bad credit customer all day long.
Wow.
Because whenever I can spend the same amount of time,
Yeah.
but that 800 beacon, no matter if I give him what he gets, he's never going to be happy.
Why is that?
Because it's all perception. You know, you can give them the best deal possible. They're always thinking that we're making all types of money.
Oh, wow.
That's just the car business. Everybody thinks that
They
we're
think
making
they're
money.
educated enough?
Well, no, they probably are. And some consumers, there's a lot of information online.
Yeah.
The thing here is that it doesn't matter what we do.
Yeah.
Some people will never be happy. Now, the one that's buried upside down, $15,000, more than likely that customer has been ran out of dealerships left and right, has been treated badly, and you're probably the only last person that is able to give them a time of day and actually try. Those customers will keep sending you customers, and they'll be loyal to you for the rest of their buying career.
Wow.
They will keep sending you customers. They'll be so grateful that you took the time when everybody else was like, oh, how much are you upside down? Oh, I'm going to go off to the next one. I need to sell a car.
Yeah.
Work hard on those customers. Those are worth it. To this day, I got customers that have been buying cars from me for 15 years, and they still come to me. And they were once bad credit, and now they're excellent credit. They own businesses, and they're multimillionaires, and they got a lot more money than I do.
Really?
Yeah.
Oh, wow. Shout out to those customers.
Right, exactly.
That's awesome.
So, all right. Well, I got to go.
Yeah.
I got to go work some deals. I got to go pencil some deals. Thank you for watching, and we'll see you on the next one.
Thank you, guys.